Okay, good morning, everybody, and welcome to the Daily Energy Markets podcast. It is Monday, November the 28th. And as was mentioned, the World Cup is steaming along, all at stake, the last round. Who will be left standing when all is said and done? It's somewhat exciting to go into the third game of the group stage, and there's still so many unanswered questions, so that keeps everybody on their toes. Meanwhile, oil prices are opening the week. Brent crude oil down again after declines last week, with Brent trading at somewhere close to 81, a little above $81 a barrel. Big drop in early trade in Asia this morning. It would seem the news out of China is somewhat bearish at this stage, at least. Let's welcome Omar Najia, Global Head of Derivatives of BB Energy. Omar, your thoughts on the direction of oil prices now? This trend is continuing, the latest auction being the China protest, but this is a rock dropping through water right through November, where we had $98 print at the beginning of the month on Brent, and now we end it going to knock on the door of 80, it seems.
Yeah, I think. I mean, I was looking for this market to rally before the fall, but it seems like it just wants to fall. But where is WTI? Did it take out $75 yet, or not yet?
I have to admit, I don't check that one. Yes, it has taken out 75. Yeah, 74.17.
Okay, so basically that's not a good sign. So. I think that the rally will have to wait, and hopefully go to the downside. I was hoping that 75 would hold, and then you could have some kind of reason to think that that previous low that we had at 75.08 would hold, and I think the one before that was 74.76. So 74.17 means it's taken out everything. So let's see. Downside beckons. But I think, going into, one thing that I keep an eye on is that, everybody has discounted, the winter, cold weather, all this kind of stuff. So it's going to be very interesting to see. Maybe we get divergence between what's really happening in the world and where futures are heading. So let's see what happens. But right now, no longer bullish, basically.
Amina Bakr, Deputy Bureau Chief and Chief OPEC Correspondent at Energy Intelligence. Getting all excited, Amina. Get to put on your big woolly sweater off to Vienna, the lovely Christmas markets, and OPEC back in action. A week away from that meeting, Amina, how do you think OPEC Plus will be digesting $80 Brent?
Good morning, Sean. Yeah, really good question. That's something we're checking on a daily basis. You know that there were reports earlier that the group might be easing the cuts by 500,000, but increasingly, as we see the price drop, the possibility of that becomes more and more remote. I know that there was a denial right away. However, just given the current environment, you would think that, they have two options: either to keep things as is, no change to the current pact, or consider a deeper cut. As I understand, for the time being, there is no proposal being discussed, a single proposal by the ministers. Maybe they're waiting a few days ahead of the actual meeting to discuss it. But those are the two things they need to consider. We still have a lot of question marks on the impact of the sanctions. Will the US release more stocks? So much uncertainty. So to wait and see is a good approach, but also to take a preemptive action and perhaps deepen the cuts would be a viable option, I would say.
Well, they would need something pretty dramatic to reverse what is clearly a rock dropping through water, it seems. Narendra Trineha, India's leading energy export, big smile on his face, not because India is winning the World Cup, but because the Indian economy is thundering along. Indian stocks are defying Asian weakness, and the Sensex is at a record. What's happening in India that we don't know about?
Well, India's economy, as you rightly mentioned, is doing reasonably well, and overall sentiments are great. And everybody, when you look at the newspapers or talk to thought leaders, Everybody is talking India when India is going to be $30 trillion economy in 30 years from now. So focus is on future, and at the same time, overall sentiment is great, and demand for petroleum products and other commodities only going northward. So overall sentiments are absolutely superb across the country. But that said, at the same time, reports coming from China are disturbing because China is our rival, Asian rival, and but we don't want to see China destabilize, because the destabilized China would be a bad news for us. We share a long border, and if you go by the history, whenever there are major disturbances, especially of the kind that we are witnessing the last few days, they always open up something new, and that is very often a confrontation with a neighbor. It could be Vietnam, it could be India, it could be any other country, to divert the attention. That's an old tactic which they have practiced for centuries, as they say. So we are not terribly happy with what's going on there. At the same time, we know that disturbances like this can look like it may get out of control, but we have seen what happens in Iran. Despite a grassroots movement led by women, the regime is very much in power. Economy is getting destroyed in the process. That might happen in China as well. Not destroyed, but weakened for sure. The second development we are following very closely is the Ukraine fatigue. And Ukraine fatigue is because we see that Germany is trying to basically now go its own way, and France has different ideas. Some smaller countries, Europe, they also feel very tired, which means that, they probably will put pressure that let the Russian oil and gas continue to flow, at least if there are buyers outside Europe, which means the pressure on the prices will ease a bit. So, we are happy with the prices, and my own sense is probably we are going to see $70, $75 per barrel Brent anytime soon. And for a big importer like India,
why are we not seeing India suffer or feel the pain of the inflation that we're seeing in many other parts of the world this year? Why has India avoided that duress and its economy continue to sort of perform?
Two points here. Number one is that India's economy, unlike China, is heavily driven by domestic demand. We are still kind of more driven by the domestic, factors, domestic demand, and domestic changes. Number one. Number two is that as the China fatigue grows, if I may use this expression, many investors have started basically moving, their capital and even facility like manufacturing facilities to India. For instance, India is now into, so far it was only China when it comes to manufacturing iPhones. Very soon you may be buying iPhones in Dubai made in India, very soon, within a few months. So there are lots of companies are basically moving their manufacturing bases to India. So that means that that's a good news for us. But as I said, we don't want China to get completely destabilized, because a destabilized China would not be another. We want a weak China. We would like to see a weak China, a democratic China, but not a very destabilized China.
Omar, your thoughts on this developments in China? Initially, the oil price markets are reacting bearishly because of the concern from sort of economic performance and demand destruction. My sense that this could be bullish potentially, given that it could signal the end of the COVID lockdown sooner. Your thoughts?
I think anybody who trades oil or anything at all based on a story coming out of China saying people are protesting or not or whatever needs to have his head examined really seriously. Anybody who wants to trade markets and look at the news and say, oh, this has happened, so this is going to happen, and that's happened, and cause and effect and whatever. That must have gone out in I don't know when, prehistorically, basically. So no, I don't think it has anything to do. It's quite interesting. If you want to talk geopolitics, it's quite interesting. You've had basically problems in Iran, and then you've had problems in China, and all this kind of stuff. It's fascinating, right? I have no doubt that exactly as happened in Iran, which is nothing, is going to happen in China, which is nothing. But you'll see it in the media, like, whatever they're fighting for. We had it. Didn't we have it in Afghanistan, where the West was fighting for women's rights and education, all this kind of stuff? It was big back then, but now you don't hear so much about it. So all this stuff is just basically I think smoke and mirrors. I think the
oil markets did move quite aggressively earlier this month, when there was some sense of expectation that the China COVID lockdown would be eased, and with that the optimistic outlook for demand growth. It was a big factor on the bearing for the market direction on the front month.
I don't know how to, I've tried to say it quite a few different ways, but let's assume basically that market moves on fundamentals because there's 2 demands and 1 supply, or 5 demands and 6 supply. If it was that simple, everybody would count, use their fingers or big and add it all up and say, right, bearish. Markets don't work like that. I mean, markets don't work like that. If you want to look at valuation of US equity companies, markets don't work like that. If you want to look at the US dollar, euro, markets don't work like that. Markets work on sentiment, on fear and greed. That's what markets work with. It's got nothing to do with, they're hoping that demand will go up because China will eat more rice and then sell the chickens because who cares? It's not to do with supply and demand. It's to do with fear and greed. That simple. So right now, people made a lot of money. Oil is where it is. Nobody much cares. So basically, maybe you get some people. I mean, I'll tell you what the next no-brainer is. The next no-brainer is going to be buying commodities, oil, whatever it is, from where, I don't know, maybe like $10 lower from here, $60, 64, 61, whatever. But the next push to the upside is going to come. It's just, whether it be June of 2023, March of 2023, August of 2023, who knows? But, you have to understand that also this, markets in the US, equity markets, there's a big comeuppance coming. That hasn't gone away. The stuff that basically, to do with, the Fed easing rates or pushing rates or whatever it is, the West in general is in a very, very bad place. And by the way, it's very interesting. You could see that in the World Cup. I mean, everybody, it's quite astonishing. It's no, but
you can see it in your tea leaves. You can see it anywhere you want to see it. Amina Bakr, fundamentals do inform sentiment. I do agree with Andy Levin in the room. And so I do challenge Omar a bit on that. Ultimately, fundamentals do matter, and they certainly matter to OPEC Plus. And they will be looking at curtailing supply as their option for challenging this move in prices to the downside, whether it's fear or greed that's sending them to $80 a Brent. Certainly OPEC Plus are going to do what they can, as they call it, to balance the market. Ultimately, will they consider the market to be currently unbalanced?
Well, we saw already, Sean, in the last OPEC report, they did revise demand downward for both this year and 2023. So they are seeing weaker demand. And how they respond to that, I mean, it's still unclear. We need to kind of wait and see. But I do agree with Omar to some extent. I mean, yeah, these markets, it's a very, very volatile environment, and sentiment is everything. So yes, they look at OPEC has to look at the fundamentals, but they also understand market sentiment. And that's why they need to keep alive the idea of signaling to the market, even if action is taken. I mean, Sean, we've been seeing that the cuts happening right now, there's an over-compliance to a huge degree. So, I mean, things don't add up. It's all on paper. And there's just sentiment. It plays a big role in today's market, and OPEC Plus understand that.
Narendra, again, coming back to the outlook for Asia with China, and clearly these protests are one aspect of the challenge of China. It doesn't remove obviously the distraction. The COVID lockdowns are very real. With that, there is economic slowdown, and as it has all over the world, when we were all locked in, economic activity slowed down. Your thoughts on where China goes with this decision? Protests, will they trigger a change in policy? How sustainable is this strategy, do you think, from China's perspective?
Well, very good question. I mean, look, my sense is that President Xi Jinping government has been more focused on politics than economics. They think they've done reasonably well. They're quite okay. They grow only at 4%, 3%, but they want to consolidate their power. They want to consolidate for next 100 years. And which means that, they're ready to make compromises. The protest that we are witnessing, China is not very, very often the Communist Party of China is not very good at handling protests. In fact, a few years ago, they sent a delegation to India to study that how do we handle protests on the ground, the civil protests in particular. And they were here for quite a few days, learning and doing all that, because in India, protests are like way of life. I mean, we're a democracy, people protest sometimes for months, then they go back home, and sometimes there are changes, sometimes their demands are not accepted. But in China, in India, we call it your cooker, democracy, in the sense you let people vent. But in China, if they vent, I mean, they just go very heavy on them with bullets and whatever they can. So the point is that let's see how they handle. President Xi Jinping is not known to be a very kind of, tolerant when it comes to these kind of things. So probably the response is going to be very heavy-handed, and that might mean, that the economy will suffer. The government will say, I don't see any threat to the party there, don't see any kind of threat, like what you've seen even in Iran. They will continue to grow economically 3%, maybe 4%, and politically they will grow even better, faster, quote unquote, their term. But I don't really see any major threat. The only problem is that if it goes out of the control, then they will basically create problems on border with India or Vietnam or even Japan or maybe even Taiwan, who knows. So those are there, but I'm not too worried about this. The only thing is that, for us, as far as the oil is concerned, worry is more, Ukraine fatigue and what OPEC plus, so-called OPEC plus, it does. Because our sense is that OPEC plus is no longer as strong as it used to be, because, Russia and Saudi Arabia both are trying to now protect their share in the global market. And Russia is more keen to protect its share. Let's say India, for instance, was importing less than 1% only a few months ago, and now we're importing 11% of our total. This is good news for Russia. They have found a new market, which is consolidating. We don't know for how long, but at the moment it's consolidating. And with the prices going down, which means Indian refiners can go to Moscow and negotiate for even deeper cuts, discounts. So which is not a bad news for economy like us. So cheaper oil, anything less than $80 per barrel is a great news for us, great news for consumers, and more than that, great news for Indian economy. A stronger economy of India is a good news for political and economic stability in Asia. A weaker China, not too weak, but a weak China is also a very good news, but not a destabilized China.
Omar, your thoughts on the upcoming next week? Obviously, we've talked about the OPEC plus meeting, but there's also the EU G7 price cap. Your views on where that goes, its impact for the markets?
I mean, again, they want to talk, they're trying to discuss a $65, $70 cap for Russian oil. Euros is trading plus or minus, let's call it $60. So it's smoke and mirrors. It's like everything else, smoke and mirrors. I know that people basically lap this stuff up. You tell them, Ukraine is winning and they're advancing and, all this kind of stuff. There's no Nazis in Ukraine and democracy and China's evil and Putin's bad and all this kind of stuff. People just slap it up. So, yeah, I think basically that what can I say? I mean, so if the price
no
of
bearing,
is 13,
basically, this is dead on arrival, basically.
No, because again, there's a misunderstanding. The misunderstanding is that is what people should focus on. So the EU wants to set a cap, but they're setting it way too high. So you've got people like the Poles saying, no, it should be $30. Now they're going to set it most probably way too high because it's optics. It's basically like, ta-da. But what everybody misses is that the Russians have prepared the decree, but in the West, it doesn't matter, right? Because that's not important. The decree actually says that anybody who sets or attempts to say that, we're going with the price cap is going not to be sold oil by Russia. And if you are a third party, so if I buy Russian oil and I then sell it on to the EU, then I'm also going to be sanctioned by the Russians. So if you get
but wouldn't it give the Russians an extra $10? They'd be happy. I mean, if the price cap is $10 above their current oil price, wouldn't that be a good thing for them?
Sean, I think basically you have a very big misunderstanding of people. people don't want to be patted on the head and told, look, you should be happy, you've got an extra $10. No, what they want is what you think, you know, what you say all the time is that it's about freedom and all this kind of stuff. So what Russia wants is to be left alone. They don't want to be told by anybody, let alone the West. So the West wants to tell Russia, you know, don't invade, but they invade. They want to tell the rest of the world, don't pollute, but they pollute. They want to tell the rest of the world, you know, you've got to do, you know, you can't kill people. You have to get the rule of law. Yet they, you know, bomb people, drone them, Guantanamo, blah, 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 blah. It's too late. The genie's out of the bottle. It's too late. Nobody, so this decree is what people should be focusing on, and they won't, which I think basically will be a great opportunity going forward. So what we'll focus on is, are they going to set it at 65 or 70? It doesn't matter, because it's all smoke and mirrors. So what you're being sold is basically like a tableau, like it's going good here, it's going good there, and we're going to do this, and we're going to do this. But reality, right? Reality is what everybody's missing, but it will come home.
Amina, does OPEC Plus care about the price cap? Will it be a factor? I mean, in a way, the surprise on some level is that they didn't change the date of their meeting in December 4th, where maybe on the 6th or the 7th or something, they may have more clarity on the different factors. Your thoughts on what impact it's having in their decision making?
No, of course it's going to factor in, Sean. And I mean, we've already seen, we expected the EU to make a decision on the caps last week, and they're still stalling. And there was an even ongoing joke within the market that they need ministers from OPEC Plus to sort them out, have these half-an-hour meetings where things get done. So it seems like the debate is still going. And as Omar mentioned, that the ranges we're hearing now is the $65 to $70, which is a joke, which is, I mean, still, I mean, Russia is selling its oil to China and India at these prices. There is no change. And if they go for, I mean, if they go for a lower range, nobody really knows what Russia's reaction. We did hear from Novak. He said two things. If the price caps are implemented by certain countries, they will no longer ship crude to those countries, and they might even shut in production. I mean, just from a report that we did a month ago at Energy Intelligence, we expected between the EU sanctions and the US price caps that Russia would have difficulty exporting around 1.2 million barrels a day of crude and condensate. That's the average. I've heard higher ranges of 2, even 3 million barrel per day losses from Russia. But who knows at this point? Does anyone really have certainty on what will happen? So that's why I'm thinking that OPEC Plus having their meeting on the 4th, perhaps they would opt to keep things as is, just see how things play out with the caps, with the sanctions, and then make a decision later on. And it doesn't, I mean, I know that they've reversed now the decision of like having these monthly meetings, but they could call for an extraordinary meeting at any point in time. So that gives them a lot of flexibility.
Narendra, obviously India being probably the biggest sort of beneficiary of this new discounted Russian oil. Ultimately, China was already in the zone of these things, discounted Iranian oil and so forth. But India, the biggest player here, really, where there could be a shift. China is never going to shift its posture here. There was a question earlier in the year that India might shift. Where is India's view on all of this and adopting it, ignoring it? What's your thoughts?
Well, first of all, you know, to say that the Western sanctions against Russia are not working is not actually 100% accurate. The sanctions are working, not 100%, but maybe 35 to 40%. And we are very aware of that. And we do feel that sometime in some of the transactions, even with Russia. And secondly, you see, but it's a bit perplexing situation, because my sense is that Germany, Italy, and France are not wholeheartedly with the West or with the US on the cap. That's the sense we are getting. If Germany and France and Italy are not, then probably they may still go ahead, but it may not work 100%, which means it may work maybe 45 to 50%, which is not a bad news as far as India is concerned. But the point here is that it's not only about purchasing crude from Russia. You know, we need to ship that oil. And we find Russia has only 68 ships, including product tankers. We have hardly 12 of our own, which means that we have no option but to depend on ships. Most of these ships are registered in Western Hemisphere. And which means if they start basically, going along with the sanctions, the new sanctions and the cap is going to be trouble for us. Number two, insurance. There is a Russian insurance company, there are Indian insurance companies which are being used now. But if they, for instance, but there are ways because there are mechanism, and if there is ways, if they really want, they can bring in sanctions one way or another. Third is, of course, the payment is always a big challenge. So, and at the same time, we look upon the West as a great ally. So I think, it's going to be not that easy for at least China, we don't know, but for India, it may not be that easy in months to come if the United States actually serious about the cap and the sanction. It may not work 100%, but if it works even 50%, that means our imports from Russia may come down by about 35 to 40%, which will not be a good news. But if the oil prices come down simultaneously to $65 or $70, which looks highly unlikely to me on a sustained basis, that means, it's going to be a kind of mix. Just to Omar's point very quickly, Omar says that fear and greed, that's basically drive the market. But where does the fear come from? Where does the greed come from? How fear and greed, they're formed. They're formed on the basis of what happens on the surface, landscape around the world in politics, society, economics, culture, everything, even football. So that's how you basically form the fears and greed. So and those are dynamics which are constantly changing. That's why they're called dynamic. So I think what's happening in China, what's happening in terms of Ukraine fatigue are playing a very important role. And oil market, my sense, are extremely anxious.
Well, financial markets seem rather optimistic at the moment, equities wise. Let's get the survey question before giving a final round comment to everybody. China COVID protests will end up being bullish for oil prices if they last, as will quicken the end of zero COVID policy. Agree or disagree? Fundamentals informing sentiment, but if they last, they could end up being bullish because they could trigger the end of the COVID zero. Omar, you started out your comments saying that you've sort of switched your sense of where this market is and ultimately going into bearish view that won't rally before it collapses, basically. What's your sense now as you form a new outlook for this market? Are we now in the collapse? Where does the floor look like, and where does it go, and so forth?
So I think if crude is going to continue lower, I think it gets to maybe like, I don't know, if I had to pick a number, I'd pick like 55, let's say 55, 60, somewhere, in the short term. You always have to be careful between, short term and long term, because I think longer term crude is exceptionally bullish. So I don't think India is going to like that. But short term, they might be like, happier going forwards. But longer term, I think there's a lot of pain to come. That's one. Two, in terms of sentiment, what I'm trying to explain is not, sentiment is derived from X, Y, and Z. Yeah, I mean, pretty obviously, sentiment is derived by, a lot of different inputs. What I'm trying to explain is that you cannot take one thing like China and say, because of China, then lower. That's what I'm trying to explain. So sentiment is derived from many, it's a mood. So it might be affected by you having breakfast, by you stubbing your toe, or your dog biting you, or your girlfriend kissing you. So it's got many different inputs, yes, but basically what I'm trying to explain is you don't take one and basically just say, aha, because China did this, then the price of oil is going to go lower. So in general, longer term, we think that, this market gets to, let's call it $55.
On
from
WTI?
On WTI, and from $55 rallies. So the point being that the trend, the longer term trend is higher. Short term is basically what we're interested in between, the next 6 months. And I think the next 6 months are going to be negative for oil because they're going to be negative for equities, and they're going to be negative for, the global economy in general. Why? Because of this winter and because of, inflation and all this kind of stuff. So, that's the view.
Amina, looking to next week, we have you've sort of signaled in your earlier comments the idea of this preemptive potential by OPEC Plus. Saudi Minister of Energy, he has been in a preemptive posture for some time now. One would think one would sort of at least put that into the thinking that sub $80 Brent would trigger more preemptive action. Your thoughts for next week's meeting?
Yeah, sure, Sean. I agree with you. I would say that Prince Abdulaziz bin Salman is very cautious in general. And before they see any clear signs that demand is improving, news coming out of China, etc., easing the lockdowns and the impact of the market, I mean, they won't make any brash decisions to reverse the pact that's currently in place until December 2023. So I expect them to continue this very, very, very cautious path, because they don't want to land into a situation like we had in 2020. The memory is still very fresh, and they don't want their budgets to be again exposed to this huge collapse. So to avoid that, I would say that yes, they will remain very cautious, and that opens the options of taking further preemptive actions.
Yes, one would think. Survey result and then Narendra's final comment. Agree, China COVID protests will end up being bullish for oil prices if they last, as will quicken end of zero COVID policy. Your thoughts, Narendra, looking forward as to where this, we didn't even mention in our discussions the global picture on interest rates and the macroeconomic outlook, the global growth story. The World Bank has been revising downward its outlook for its annual growth this year. Generally, all is somewhat bearish. Your thoughts for the direction of oil prices?
Well, first to your comment on this, the global recession, particularly in the western part of the world, Europe and the United States, our sense now is that probably recession, yes, but it's going to be shallow. We don't think it's going to be a deep recession, and that's not a bad news. I mean, if they keep on really, the central banks in America and Britain, they keep on playing proactive role, I think they probably will be able to manage the situation better. And a shallow recession is not that bad news when we look at, for instance, from India, which is now the 5th largest economy on the planet. But when it comes to oil, I mean, look around in India, I mean, we see the demand going up all the time. And as you know, that demand in India is going up by 3% per annum. Even if it does go up by 3%, I mean, this probably is going to be, there's going to be some significant increase, nevertheless. But oil, in India, at the same time, we don't want oil to go down to $60 per barrel, because that's not a good news for us. We want a good price, which means that economies of the Gulf, GCC country, continue to grow. Prosperous and growing GCCs in India's interest, because there is a very major market.
Would India be understanding if OPEC Plus next week cut further?
Well, my sense is probably they won't do that, because this is not the right time, because they need to understand first what happens in China and everything. OPEC would not, my sense, OPEC would not like really to react to developments in China in such a manner which has a negative impact on the market. China is a very important, customer for the OPEC country, more particularly for Saudi Arabia. I don't think they're going to do anything else. They're going to wait and watch, and which probably is more mature. OPEC is a very mature organization. They know Asia very well. They know China, India very, very well. I don't think it's going to be any knee jerk or any major cut or anything of that sort. They're going to wait and watch, just like India is doing, just like the rest of the world is doing.
Well, let's wait and see. It's Monday morning. The week has started with a big drop down. One has to say, oil prices don't often have big drops like this on the open on a Monday. Of course, it may be a reaction to the uncertainty of what is happening in China, but one has to note that this trend line has been underway all month, so it's not a new trend. This dropping momentum, this dropping sentiment. 98, as I said at the beginning of our discussion in early November, the end of the month now, looks like we could break through 80 on Brent this week if this sentiment continues. Well worth paying attention to. Thank you so much, as always, Omar Najia, anchoring Monday mornings. Narendra Taneja, lovely to have you back. We probably won't see you before the big festive season. Thank you, and happy festive holidays to you in India. Amina Bakr, as always, great to have you. Keep us posted on next week. Little text messages from Vienna would be much appreciated. All the best. Have a great week.